In this video, I'm going to be sharing with you a scalping session for price action trader. I'm going to be relying only on pure candlesticks as they are being printed on a chart, only using one indicator as a supportive indicator only, and as the 12-bar exponential moving average. Right now, we can see we have quite a strong bearish push down with the break new low. However, the bullish correction also played out with the break new extreme. So right now, I'm expecting a consolidation. Market phase is going to enter a brand new cycle, downtrend into a consolidation. I'm really looking for bullish reversal just yet, because this was quite a significant bearish trend down. This is the first time we broke above EMA. So for this reason, I'm not going to be really looking to predict reversal just yet. I may expect additional bearish continuation. Alright, cheers. I'm resuming the video as I'm going to take a double trap setup if we get a trigger below this bearish bar. I'm waiting for this bar to get a trigger. Okay, we get a trigger, so I'm going to chase it with the stop here. Alright, we got film. So I'm going to place my stop loss one tick above the single bar. I'm going to go for 6 contracts, 2 points, even 1 contract as a runner. And the reason why I'm taking this setup is because we had a consolidation phase, market entered a brand new cycle, correction phase. We had a spike and a channel working higher. Now, there was a nice breakout pullback here. And first of all, I want to talk about this was a congestion, and most breakouts of congestions will fail, at least temporarily. So you can see we had a congestion attempt by the bulls to create new extreme for this spike and a channel following trendline rule. The resistance came into play. We had massive bearish push down. We had a nice breakout pullback, breakout out of the congestion. This allows me to withdraw brand new short-term downtrend because there are so many matching highs. The sellers are coming to the market. They're going to range rules. Remember, we traded down into this consolidation. So downtrend, entering a brand new market cycle phase, correction phase. The resistance is coming into play. The smart sellers are staying at these highs. We bought some max order, but we need to tick through, and we tick through. So I'm going to place my stop loss to break even because anything we make is just a bonus. At this point, I'm holding 1 contract as a runner, scaling out of positions in case market does something unexpected. Now, we had brand new downtrend working lower. I don't think you can take failed second entry long because there was no tick below this bearish bar, and you can't take engulfing. You had a new low first entry short, second entry short, but notice I have shortened, uptrend still in play, and this second entry short is not full at the EMA. So I cannot take this, okay? Not full at the EMA. Short-term uptrend is in play. There was a break, close outside, move to a new extreme, and EMA is rejecting once and twice. And remember, we are playing the trend range rules because we traded down. Perfect price action. You trend down into this trend range, so this gives you more of a bearish bias. Okay, I can see all the sellers come into play here. Strong push below EMA confirming the seller's momentum. EMA rejecting once, twice. This double trap stop all the first and second entry who was too early, and you can see break, move to a new extreme of this uptrend, double rejection of the EMA in a great signal bar. I even chased the entry by 1 tick. Normally I use limit orders, but I didn't want to miss it, and I'm going to leave my runner at these lows. I'm going to trail it if we get each significant pullback. Alright traders, so runner just got hit. We didn't manage to get a significant runner this time, but it was still a decent trade to start the day with. Alright traders, resuming the video, as I was expecting to take a second entry short, also a failed second entry long. I didn't want to sell below this bar with the bullish body, but I needed to see much stronger bearish bar. Since the bar didn't close strong bearish, I'm going to be patient because there's slight bullish bias in here. We can see higher low here. There may be a wider channel. So I was looking to play the trend range rules, but I wanted to see nice bearish bar. We have significant tail at the bottom. It's a shame because this is micro new low, first entry short, second entry short, and also new high. First entry long, second entry long, further continuation. You don't want to sell here because the signal bar is not good and you're selling at the bottom of this move. You can see you need to correct a little bit. It may work. The context is great because you can see once again the smart sellers, they're selling at the top of this trend range, and most breakouts will fail. Okay, when you're trading a structure, remember this, most breakouts will fail at least temporarily. Okay, I was not looking to fade right here given the high lows, and we don't have clear distinct break below EMA, so you never know if there's a wider channel, but this is a failed breakout above this key level. They trap all the bulls. This is a reversal pattern. The more and more I'm talking about this, the more it kind of bugs me that I didn't pull the trigger here, because we have 2 high probability setups in one. Not just a failed second entry long continuation, but also a second entry short. At 2 key entry points, EMA, the key level, and probably we can draw even wider downtrend. Yeah, that's a shame, but never mind. That is part of trading. I cannot get frustrated. At least we read it correctly, and it's always good to know. But this is what you're looking for. You gotta trick your mind to sell high because your common sense will tell you, I see price action working higher, so I gotta keep buying. You cannot follow the common sense. You need to switch to price action rules and try to think in the way of markets. Okay, so I'm redrawing to slightly wider downtrend, but I would like to see a lower high confirmation setup to trust that we have this wider downtrend in play. Okay, we didn't get lower high, so I'm switching back to tighter channels. We can see slight bullish imbalance, higher lows. So right now, not that easy for me to navigate because I don't want to sell too early given the slight bullish imbalance. We didn't make it all the way to the bottom, but at the same time, I don't want to go long directly into these highs. So I'm just going to be patient. You can never go wrong by being patient. A good high probability setup will present itself to me soon. Right, we have a second entry short, but you can see we pushed above EMA and we have congestion. There was a strong bullish spike, so I'm not taking this second entry short just yet in the middle of this small congestion. I may consider a lower high breakout pullback. That would technically be new high, first entry long pullback, second entry long failure. But I wanted to see getting rejection by the EMA and not such a strong bullish push up in the middle of the congestion. So I skipped the second entry short and I'm waiting for some breakout pullback. Resuming the video, as we had the lower high breakout pullback, I'm going to measure with chart hands and see the bar was over 4 points big. So for this reason, I hesitated. But this is what you do when you can see price action not aligning with what should happen according to rules, because normally there should be EMA rejections. We pushed above, there was a strong bullish spike, also indicating bullish momentum and congestion. So I cannot trade in the middle of congestion. It is tempting to both buy and sell at the same time. So you can see all the early bulls and the shorts, they got trapped. Price action broke lower. Most breakouts fail. Came back, tested it. This is what we call breakout pullback. This is the lower high breakout pullback that we expected. Unfortunately, the single bar was way too big. The downtrend needs to get new extreme. This is why we're thinking bearish, okay? We're coming off the range highs. This downtrend needs to get new extreme, which is exactly what happened. Right now, you can see smart bulls are buying at the bottom of the trend range. Perfect price action. We have a downtrend working lower. We have a failed breakout, which is prices correcting to the upside. Now, I would be interested in rejection at the EMA or possible this key level. This key level can be a little bit lower. I can move it, let's say, around this area. I would like to see pullback, and based on reaction of this key level, this will tell me if I'm still looking for new extreme of this downtrend. Because remember, we are trading a big trend range. Most breakouts will fail. And there was a great second entry long at the bottom of the trend range going to rules. You want to buy low, sell high. I didn't see a really good setup to sell high. But right now, I can see that we have correction. We're expecting to get a new high for the uptrend. If we get new high, second entry short, it would be a good setup. The key level, the support, is transforming as a resistance. Bullish reversal attempt failed with the break new extreme. Resistance held, sellers came into the market. Strong push bull EMA. So right now I'm looking for a failed second entry long. Or if you're going to continue working a little bit lower, I'm going to be thinking about second entry short. Because we can see this is a breakout pullback. This break area is holding. This means I'm thinking more bearish, expecting bearish continuation. Alright traders, I'm going to wrap it up with my one single trade. Very straightforward price action today. We started with bearish bias, which basically dictates the bias you want to look for in the initial phases of the trend range. Now, there were two great high probability setups right at the very beginning of today's session. Now, you can see when you're trading a trend range, you always need to mark the key levels, because according to range rules, you want to buy low, sell high, and when you see breakout, you want to fade it, of course, under the right conditions. I don't see any good failed breakout opportunity today. You just want to mark it because you expect the breakout to fail, and then look for reversal pattern below or above the EMA. We already talked about this failed second entry long, second entry short. This lower high breakout pullback was quite big, and now we have a second entry long. You have a new high, first entry long, second entry long. All downtrends played out. Remember, in trend ranges, I'm not really looking for too wide of a channels. I'm looking for tight channels because market just tends to pivot upon reaching these extremes. And this is exactly what is happening. The key level is coming into play. Great second entry long with solid signal bar. Then you can see breakout area, the support has transformed into resistance. And this is important because once you can see the break of the key level, if you're going to see push above this key level back into trend range, you can start thinking about buying because the support is back in play. But because the support never held, and the support transformed into resistance, you can see somewhat rejecting here, but there's still room, but definitely rejecting here and rejecting here. Uptrend played out with the break new high, the bullish reversal failed, and right now this key level is acting as resistance, and you are following the bearish bias. So decent high probability setup to take a short, micro double top. Then we had a failed second entry long, which we were looking for, but notice there was no trigger below my bearish bar. There was an inside bar, it stalled, so unfortunately, no way for you to take the setup even though the context is good. And EMA flattened and we entered another trend range. I marked another lower high, confirmation of visual to like a pullback, great signal bar. Remember, we are scalpers, so you're only looking for a small portion and you can take more of these setups. I would not recommend swinging this setup because you can see the downtrend played out, so this is only good stuff for a scalp. There is no good high probability setup. Now we can see we have downtrend working low, break new extreme. We have overshoot of this uptrend, which means we can expect stronger momentum in the opposite direction, and we have double high probability setup. New low, first entry short, second entry short, new high, first entry long, pullback, second entry long failure. The second entry long didn't trigger a bull bar, so not too many bulls are going to get trapped. Either way, this is a decent high probability setup. And then you have high-low confirmation setup. We have quadruple bottom, bottom of the trend range. So very similar to this second entry long. You want to buy low, sell high. And because downtrends played out, you can see how broad this sideways break is. This is very important because you can see you have one spike down and such a broad structure. This is indicating to you that there is no wider channel because there will be too much empty room. So great high-low confirmation setup. And that is pretty much it for the day. So very straightforward price action. You can see spike down into trend range, spike down into trend range. A lot of high probability setups. Unfortunately, some of the single bars here weren't that great, but overall price action very predictable today. And this is how you follow the price action using price action rules. I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.